And let's stay with currencies and the impact that all this carnage is having on world markets. Investment has flown to the safe havens of the Japanese yen and Swiss franc, but in the last few days the Australian dollar has dropped back significantly against the US dollar. Well, to make sense of all this, I spoke earlier to Lien, Director, Global Research and Analysis at GFT Forex. Lien, welcome to the programme.
Thank you so much.
Let me start with America first. How big a deal is S&P's downgrade of the United States?
Well, it's actually a very big deal, Tiki. I mean, think about it. This has never happened before in the history of the United States. So from a psychological perspective, this has already triggered quite a bit of a sell-off in Dow futures. And I think that that is an example of how U.S. investors in general will react, because we've got the bond market expected to have quite a bit of a reaction as well. So from that perspective, it is a big deal. But if you look at it from the perspective, will we see a massive exodus out of U.S. dollars? We probably won't, simply because there's so much damage control happening right now, and short-term assets are still rated AAA.
Yeah, I was going to say, I can see a lot of playing down of the downgrade, and only one of the three agencies in any event actually downgraded the credit rating. So there's a lot at stake, really, if there's a complete panic.
Right. I'm kind of smiling. The reason for that is because I know that people will start to say, given that 2 out of 3 rating agencies are still rating the U.S. as AAA, that means it's AAA, right? So, but the key here, though, is that S&P is one of the behemoths in the U.S. Rating agency, and I think that at the end of the day, this is a good opportunity for a lot of central banks to talk about diversifying outside of U.S. dollars, and that's a matter of perhaps doing it behind the scenes, not so loudly these days, but right now there is a lot of damage control, and I think that to some degree that damage control is working. But with that in mind, I wouldn't rule out the fact that we'll probably see additional losses in U.S. markets today.
How much more of a move do you see to the safe havens of the Swiss franc and the Japanese yen, and how much more policy moves will be made in response in those countries?
That's a very good question. We saw the Swiss franc rise to a record high against the U.S. dollar in back of this. And I think that the yen and the Swiss franc will continue to rally probably another 2 or 3%. But at the same time, you'll see a lot of pressure on the policymakers to react. Now, policymakers had a really good opportunity to come out after the G7 conference call and deliver some sort of coordinated response. They told us they're thinking about it, but I think they're also watching the markets to see how U.S. behaves before doing that response. So I think you'll continue to see intervention by the BOJ, the SMB, but I think there's a very, very good possibility we could see coordinated intervention this coming week, and that could be...
So you actually see a third quantitative easing, because presumably, I mean, that would weaken the US dollar, wouldn't it?
Right. Right now, there's 2 possibilities. One is coordinated intervention, where the Federal Reserve gets their buddies to buy U.S. Treasuries, which would help depress yield. The other one is actually asset purchases, which is another round of quantitative easing. And that could come because we've got the Federal Reserve meeting coming up this week as well. And that could help stabilize the bonds as well as the equity markets in the U.S. if there are significant losses this come Monday.
What about the euro and the pound? Because that was the real big shock, wasn't it? The downgrade was quite likely, but over in Europe, the euro in particular looked as though it might be struggling, and we've now got the European Central Bank buying both Italian and Spanish bonds.
Right, and that's why we're seeing the euro and the pound kind of decouple from the Australian dollar and the New Zealand dollar. It's actually doing quite well against the U.S. dollar. I think this is an example of the additional stimulus that central banks can give to the markets, and it's moving in that direction. So the ECB came out and said that they're looking to resume the asset purchases possibly and start asset purchases in Italian and Spanish bonds. It would not be such a huge stretch, Tiki, for the U.S. to do the same, and I think that's a very good possibility this coming week.
The Australian dollar, it's a commodities currency. We've got questions about growth. Where do you see it going?
I'm actually still bullish the Australian dollar over the long term. Right now we've got a lot of risk aversion that's kind of driving the Aussie dollar lower. But I think if you think about the sound fiscal finances of Australia, the fact that it's still AAA, the fact that deposit rates are still relatively high, I think that's going to make it a very attractive currency for central banks to add to their reserves.
And finally, we've got US Senator John Kerry calling it a Tea Party downgrade. But you actually think the downgrade will be good for the US dollar?
Well, I think in the long term what it will do is will force the U.S. government to have more fiscal consolidation efforts and be much more concerted about it. We've seen downgrades in Australia in the 1980s, Canada in the 1990s, and also Japan not too long ago. All those led to much more consolidation, end up being positive for those share markets. So I think we could see the same thing this time around. It might take a while, Tiki, but I think we'll be there at the end of the day.
Kathy Lien, it's a great night to have you on the programme. Thanks you so much for joining us.
Thank you.